Welcome to the New Economy Tech. This channel is dedicated to uploading regular, bite-sized news content, documentaries, and exclusive videos on present and future digital economy, as well as the latest advancement in digital assets like cryptocurrencies, AI, and robotics.
Today we are in the midst of a technological revolution that is fundamentally changing our world, reshaping how we communicate, access information, and purchase goods and services. As the central bank of the United States, the Federal Reserve is charged with promoting monetary and financial stability and the safety and efficiency of the payment system. In pursuit of these core functions, we have been carefully monitoring and adapting to the technological innovations now transforming the world of payments, finance, and banking.
Stay ahead of the transition into the fourth industrial revolution by learning the fundamentals, basic of finance, and take action towards your goals. It is vital you learn the rules of the games being played so you don't get played. Do your own research. Only when you know the end goal can you better position yourself. Start learning today and educate yourself first before taking action towards any of these digital assets or projects.
Couldn't get through an interview without asking about crypto, but in particular, Russia just said that they would accept Bitcoin as a payment for their energy resources. What does that say to you about where we are in the crypto conversation?
Well, crypto is obviously grown by leaps and bounds, and it's now playing a significant role, not really so much in transactions, but in investment decisions of lots of Americans. And the president just issued a couple of weeks ago an executive order tasking us and other agencies with thinking about the regulation of crypto.
I mean, you're less skeptical about it than in previous. I mean, we've been talking about it together for a long time now, and I think you've had a skepticism about crypto technology.
I have a little bit of skepticism because there are, I think, valid concerns around it. Some have to do with financial stability, consumer investor protection, use for illicit transactions and other things. On the other hand, there are benefits from crypto, and we recognize that innovation in the payment system can be a healthy thing. We would like to come out eventually with recommendations that will create a regulatory environment in which healthy innovation
can. And then finally, cyber. It's the one thing that everybody's worried about, especially given what's happening in Russia right now.
Yes.
Is there an industry or industries that you're particularly concerned about?
Well, we are worried about the energy sector and have also focused, especially in this building, on the financial sector. We have a robust program to work with financial firms at Treasury to monitor and quickly inform financial firms about threats that are detected or firms experience.
How confident are you then that we're...
Cyber is a real risk, and we recognize that we have vulnerabilities, and we're doing everything we can to be prepared to deal with that and to up our defenses. But this is a significant risk. In 2008, a person or group of people using the pseudonym Satoshi Nakamoto proposed a decentralized peer-to-peer system for making and processing payments. A key challenge in digital payments is to prevent the same assets from being spent twice. The Bitcoin white paper proposed a novel method for validating transactions using cryptography that addressed the so-called double spend problem. This and other innovations related to distributed ledger technology are the foundation for blockchain-based digital assets. Over time, the prices of Bitcoin and other cryptocurrencies have been quite volatile, and that's inhibited their widespread use in payments. Adoption of cryptocurrencies for payments may be further inhibited by high fees and slower processing times than those associated with other forms of payments. As a practical matter, you'd have a hard time using cryptocurrency to buy a sandwich or a gallon of milk. Other digital assets, like stablecoins or potential central bank digital currencies, could succeed at being more widely used as a medium of exchange, raising potential benefits and risks. Proponents believe distributed ledger technology will transform other aspects of financial services, like trading, borrowing, and lending. They point to capabilities like smart contracts, which use computer code to automatically execute an agreement if certain pre-specified conditions are met. To the extent that setup is more convenient and costs are competitive with those required for traditional financial services, digital assets offer the potential to expand access. And the U.S. is actively involved in the work of the G20 to address challenges and frictions with cross-border funds transfers. And in 2023, the Federal Reserve currently plans to launch FEDNOW, which is an instant payment service that will enable payment in real time, around the clock, every day of the year within the U.S. payment system. Now, President Biden's executive order tasked experts across the federal government with conducting in-depth analysis to balance the responsible development of digital assets with the risks they present. These tasks will be guided by 6 policy objectives. The first is to protect consumers, investors, and businesses. Second, safeguard financial stability from systemic risk. Third, mitigate national security risks. Fourth, promote U.S. leadership and economic competitiveness. Fifth, promote equitable access to safe and affordable financial services. And finally, support responsible technological advances which take account of important design considerations like those related to privacy, human rights, and climate change. Some have also suggested that the introduction of a central bank digital currency, or CBDC as it's known, could contribute to a more efficient payment system. As a liability of the central bank, a CBDC could become a form of trusted money, something comparable to physical cash, but potentially offering some of the projected benefits of digital assets. But there is one basic lesson that should apply. That lesson is that regulation should be based on risks and activities and not on specific technologies. When new technologies enable new activities, products, and services, well, financial regulation needs to adjust. But that process should be guided by the risks associated with the services that are provided to households and businesses, and not based on the underlying technology. In other words, whenever possible, regulation should be tech neutral. For example, consumers, investors, and businesses should be protected from fraud and from misleading statements, regardless of whether assets are stored on a balance sheet or they're stored on a distributed ledger. Similarly, firms that hold customer assets, they should be required to ensure those assets aren't lost, stolen, or used without the customer's permission.
Thank you for watching this video. I hope you found it very informative. Have a lovely rest of your day. Stay safe and God bless you. If you do like this channel, give us a thumbs up. Click the subscribe or notification button to stay up to date, or share our videos with your friends and family so they too can stay informed.